the participants for the second time. This would be an intermediate level session. My name is Prathamesh Mallya. Again, I will introduce myself. I'm an expert in commodities and currencies. This session would possibly last for 30 to 45 minutes. From the last session where we ended up, we talked all about basics. This would be an intermediate level thing, wherein if you want to trade in commodities, what are the basic necessities for you to understand that you can put your trade in commodities. And these are quite simple things, but the only thing is it has to be understood in the right context. This webinar would be a combination of Hindi and English for the participants to understand things in a simple manner. तो यहाँ इंग्लिश और हिंदी का कॉम्बिनेशन रहेगा और स्टार्ट करते हैं हम ये वेबिनार. Can everybody see my screen now? If yes, please type in the window yes. Okay. And is my voice audible to everyone? Okay, I can continue now. Thank you very much for the confirmations. Okay, the structure of the webinar would be what you can see on the screen now. I would tell you about all the products जहाँ पे आपको ये पता चलेगा कि अगर आपको कमोडिटीज में ट्रेड करना है तो कौन से प्रोडक्ट्स अवेलेबल है ट्रेड करने. उसके अलावा आपको इंडेक्स प्रोडक्ट्स जैसे इक्विटीज में है वैसे कमोडिटीज में क्या चीज अवेलेबल है ट्रेड करने के लिए. ओवरऑल कॉन्ट्रैक्ट का स्नैपशॉट बताया जाएगा आपको इस पर्टिकुलर वेबिनार में. और साथ में आपको करंट इश्यूज जो ग्लोबल और मैक्रो है कॉन्टेक्स्ट में जो कमोडिटीज को ट्रेड करते हैं और किस तरीके से समझा जा सकता है उसको वो इस पर्टिकुलर वेबिनार का कॉन्टेक्स्ट है. स्टार्ट करते हैं गोल्ड एंड सिल्वर. गोल्ड ऐसी कमोडिटी है जो सबके पोर्टफोलियो में होना जरूरी है और ये सबके पोर्टफोलियो में होना जरूरी है. सबका डिजायर और नीड रहता है कि गोल्ड को अपने पोर्टफोलियो में किसी न किसी तरीके में ढाला जाए. अकॉर्डिंगली अगर आप गोल्ड में ट्रेड करना चाहते हो कमोडिटीज मार्केट में तो आपको कॉन्ट्रैक्ट स्पेसिफिकेशंस के तौर पर 4 प्रोडक्ट्स अवेलेबल है ट्रेड करने के लिए. गोल्ड को अगर आपको ट्रेड करना है एमसीएक्स वाले प्लेटफॉर्म में जो प्रोडक्ट्स अवेलेबल है वो गोल्ड रेगुलर है जो जिसका लॉट साइज जो है 1 किलो का है, जिसका जो कोट आपको स्क्रीन पे जो भाव दिखता है वो कोट प्राइस पर 10 ग्राम्स का रहेगा. इसमें अगर 1 रुपए का मूवमेंट ऊपर नीचे होता है तो आपको 100 रुपए का प्रॉफिट या 100 रुपए का लॉस होगा. ये बड़ा गोल्ड है जहाँ पे 1 kg साइज ऑफ द कॉन्ट्रैक्ट. सिमिलरली गोल्ड मिनी कॉन्ट्रैक्ट है. इसमें भी आपको जो स्क्रीन पे भाव दिखता है ट्रेड करने वाला वो 10 ग्राम का कॉन्ट्रैक्ट होता है, 10 ग्राम का कोट होता है. आपको जो लॉट साइज रहता है यानी टोटल लॉट साइज ऑफ द कॉन्ट्रैक्ट वो 100 ग्राम का कॉन्ट्रैक्ट है. इस पर्टिकुलर कॉन्ट्रैक्ट में 1 रुपए के ऊपर या नीचे होने से आपको 10 रुपए का प्रॉफिट या लॉस होने की पॉसिबिलिटी होती है. थर्ड ऑप्शन जो आपको अवेलेबल है गोल्ड गिनी है. इसका जो कोट यानी आपको जो भाव दिखता है स्क्रीन पे ट्रेड करने के लिए 8 ग्राम का भाव दिखता है. इसका लॉट साइज 8 ग्राम का है. इसमें 1 रुपए का ऊपर होता है. सिमिलरली गोल्ड पेटल कॉन्ट्रैक्ट है जहाँ पे कोट जो आपको स्क्रीन पे भाव दिखता है वो 1 ग्राम का होता है. इसका जो लॉट साइज होता है बिकॉज वी डील इन फ्यूचर्स लॉट साइज में इनको गिना जाता है. 1 ग्राम का कॉन्ट्रैक्ट है. इस पर्टिकुलर कॉन्ट्रैक्ट में आपको 1 रुपए का अपसाइड या डाउन साइड मुंह पे 1 रुपए का ही प्रॉफिट या लॉस होने की पॉसिबिलिटी होती है. दूसरा जो चीज यहाँ पे हमको समझना है कि ये कंपल्सरी डिलीवरी मैकेनिज्म में आता है. कंपल्सरी डिलीवरी मैकेनिज्म का मतलब ये है अगर आपने इस कमोडिटी में अपना पोजीशन लिया है, बाय किया है या सेल किया है, आपको कमोडिटी का कॉन्ट्रैक्ट एक्सपायरी होने के 5 दिन पहले, एग्जाम्पल के तौर पर हर 5 तारीख को गोल्ड का कॉन्ट्रैक्ट एक्सपायर होता है, उसके पहले 5 वर्किंग डे के पहले आपको अपनी जो भी पोजीशन है बाय या सेल स्क्वायर ऑफ करना जरूरी है. अगर आप स्क्वायर ऑफ नहीं करोगे तो आपको डिलीवरी मार्किंग हो जाती है। इसलिए ये पर्टिकुलर कॉन्ट्रैक्ट जो है वो कंपलसरी डिलीवरी मैकेनिज्म में आता है। हम एज एन इन्वेस्टर, एज ए क्लाइंट, आपको ये जानना इसलिए जरूरी है बिकॉज आपने अगर डिलीवरी पीरियड में जो लास्ट 5 डेज में होता है उसमें अपनी पोजीशंस अगर ओपन रखी तो आपको जो है गोल्ड की डिलीवरी लेनी पड़ेगी। इसलिए आपको ये चीज जानना जरूरी है। आगे बढ़ते हैं सिल्वर पे। सिल्वर अगेन गोल्ड के कंपैरिजन में हालांकि बहुत छोटी कमोडिटी है, लेकिन वोलेटिलिटी सिल्वर और गोल्ड में कंपैरिजन में सिल्वर में बहुत ज्यादा है बिकॉज सिल्वर एक ऐसी कमोडिटी है जिसका माइनिंग इज अ माइनिंग ऑफ 2-3 मेटल्स, जहाँ पे सिल्वर एक एलॉय के तौर पर हमको मिलता है। अकॉर्डिंगली सिल्वर में जो ग्लोबली इंटरेस्ट लेवल्स है वो हेज फंड्स का ज्यादा है, इसमें वोलेटिलिटी इसलिए ज्यादा है। प्रोडक्ट के तौर पर अगर आप इसको देखें तो सिल्वर आपको 1 kg 30 kg कॉन्ट्रैक्ट है, फर्स्ट कॉन्ट्रैक्ट जो बड़ा सिल्वर कहते हैं, जिसमें आपको कोट जो स्क्रीन पे भाव दिखता है वो 1 किलो का होता है। आपको 1 रुपए के अपसाइड या डाउनसाइड मूव पे 30 रुपए का प्रॉफिट या लॉस होता है। सिमिलरली आपको सिल्वर मिनी अगर ट्रेड करना है तो आपको जो स्क्रीन पे भाव दिखता है वो 1 किलो का होता है। आपको जो कॉन्ट्रैक्ट साइज है यानी लॉट साइज जो कहते हैं वो 5 किलो का होता है। 1 रुपए के प्रॉफिट या लॉस पे यहाँ पे आपको 5 रुपए का प्रॉफिट या लॉस होता है। सिमिलरली सिल्वर माइक्रो में भी आप ट्रेड कर सकते हैं। ये सारे प्रोडक्ट ऑप्शन इसलिए बताए जा रहे हैं बिकॉज आपको सिल्वर जो बड़ा कॉन्ट्रैक्ट है उसमें ट्रेड करने के लिए करीब करीब ऑलमोस्ट अराउंड मोर देन 3 लाख 4 लाख रुपीज लगता है। इसलिए अगर आपके पास उतने पैसे नहीं है तो आप सिल्वर मिनी और सिल्वर माइक्रो में भी ट्रेड कर सकते हैं। इसलिए आपको ये ऑप्शन बताया जा रहा है कि कमोडिटी मार्केट्स में ऐसा नहीं है कि अगर आपके पास बहुत बड़ा पैसा है तो भी ट्रेड कर सकते हैं। एंड पॉसिबिलिटी यही है एंड द नेक्स्ट पॉसिबिलिटी इज कि अगर आप इफ यू वांट टू ट्रेड इन सिल्वर एज अ कमोडिटी you can have options in silver mini as well as in silver micro. And again, this contract comes under a compulsory delivery mechanism wherein you need to close your positions before 5 days of the contract expiry. If you do not do it, you are liable to take the delivery of this commodity. Hence, from a risk perspective, a client has to understand that you cannot keep your positions open 5 days till the last 5 days. You cannot keep your positions open in silver contract. This is from a risk perspective. तीसरा जो प्रोडक्ट अवेलेबल है वो है एनर्जी काउंटर में क्रूड और नेचुरल गैस। In this particular commodity, the size of the contract is 100 barrels. 1 rupee move on 1 rupee move upside or downside will give you 100 rupees profit or loss in crude. Similarly, you have natural gas to trade as an option. The contract size is 1250 MMBTU, which is million metric British thermal unit. The quote that you can see on the screen is for 1250 million metric British thermal unit. Every 1 rupee move will give you profit or loss. So this is for your understanding. As far as the delivery mechanism is concerned, crude and natural gas cannot be delivered, and hence these are cash settled. This is very important to understand because the way you see in gold and silver, you cannot keep your positions open before. I mean, you have to close your positions before 5 days of the expiry of the commodity. In as far as crude oil and natural gas is concerned, since this commodity cannot be delivered, this is cash settled. There is no risk of delivery marking. This is one of the important points that a client or investor has to note while trading in commodities. This is base metals. The five commodities that are available to trade would be lead, zinc, aluminium, nickel, copper. Most important thing is everything is deliverable, which means if you keep your positions open before the expiry of the commodity, you are bound to take delivery of this commodity irrespective of whether you want to take the delivery of the commodity or you do not want to give the delivery of the commodity. As far as lead, zinc, and aluminum is concerned, the size of the contract is 5 metric tons. The quote that you can see on the screen, the price quote, would be around 4 kg. As far as nickel goes, the size of the contract is 1.5 metric tons. The quote that you can see on the screen is 1 kg. As far as copper goes, the lot size is 2.5 metric tons, but the price that you can see on the screen is for 4 kg. This is some basic understanding wherein if you're trading in a particular commodity, you need to understand what is the lot size, what is the price moves, what are the every 1 rupee profit or loss will give you what kind of profit or loss in your pocket. Hence, these are some basic necessities and understanding if you're trading in any of the commodities that has been discussed now. This is a snapshot of the entire past three, four slides, wherein everything is summed up in one particular slide. So this is some basic necessities required as far as commodity trading is concerned. As you can see, for instance, gold, the price code that you can see on the screen is per 10 grams. The trading unit is 1 kg as far as the gold is concerned. The size is 1 rupee. Price movement every one of this commodity is 50th day of the month. Delivery logic in the delivery period. The delivery unit is 1 kg. This is how the understanding specification goes. Okay, now we have understood what is there on our plate, on our table. It is also necessary to understand what are the commodities that are being traded, what is the context that it is used globally, so that you have a basic understanding of why the price moves that happen day in and day out affects the entire ecosystem as far as metals is concerned. As far as aluminum is concerned, this is a commodity which is heavily used in transportation, which is heavily used in electrical sector, followed by construction, machinery and equipment. And because it is used in all the industrial usages, the importance of the commodity in the global context holds uh, has a lot of importance. While on the right hand side, if you see lead as a metal, 80% of the lead is used in making of batteries. Hence, the commodity is very important from a global context because usage of batteries with regards to automobiles and manufacturing of automobiles, batteries are the main component. And now we are moving towards electrification of all the automobiles. Hence, lead is one of the important commodities in the global context, which has to be understood. And because it is one of the global commodities, all the global economic events has an impact on the price of this commodity. Next is copper. Copper is one of the important rare metal earths, or say one of the important metal that is mined in the earth. And usage of this commodity is purely in the construction area, followed by electrical, transportation, consumer and general products, followed by industrial metal equipment. Copper is one of the main ingredient as far as construction activity is concerned. Copper is also considered as the benchmark of global economy. The way price moves in copper happens defines that global economy is in doldrums or global economy is growing. And hence copper is one of the important commodities that one has to understand if you are a part of commodities. The other commodity that we are talking about is nickel. Nickel is also one of the important ingredients for making of batteries. And this is one of the important metals that would be heavily used for electrification of vehicles in the coming years, and hence the importance of nickel as a commodity increases manifold. And yes, and because of this particular reason, nickel has to be understood in the global context. Zinc again is one of the important metals. It is used in galvanizing and die casting for major purposes. And because it is used as an industrial commodity, it holds a lot of significance as far as global economic activity is concerned. So this is where we stand as far as usage of base metal is concerned. All the base metals that we discussed above has relevance, has importance, and hence the price discovery holds significance. Whether it is global commodity, whether it is domestic usage, whatever it is, you have to understand this commodity right from its core in order to gauge where the price headed. Natural gas. This is one of the most important and the favorite bet of traders. This is most volatile commodity. This is a commodity which is heavily found in the US. Wherever you dig hole, you can find natural gas. The process of finding natural gas can be seen on the first particular square, wherein it is nothing but a combination of rich fossil fuels that are buried under the ground, and a big pipe is dig deep inside the ground in order to extract that gas. And on the right hand side, you can see how the production and delivery of this particular natural gas comes into picture, wherein chemical agents are used in order to process this natural gas from one place to another and transport it to where it is required. We have to understand this commodity in the context, because this is a commodity which is heavily used in US. As you can see on the right hand side of the chart of this particular graph, wherein 35% of the natural gas that is produced in the US is used for consumption of electricity, for producing electricity, and then it is followed by 33% for industrial activity, then followed by 17%, which is residential consumption, commercial consumption, and then transportation. Which means natural gas is a commodity which is heavily used for all the industrial purposes, and because it is a part of industrial purposes, this commodity has a price. And because it is traded in US, we have a similar replica of there on the MCX, and it is one of the important traders bet. I mean, you have lot of volatility, and because there is lot of volatility in this particular commodity, it is considered as a trader's paradise. You can benefit if you are right in direction. Every 1 rupee more in this particular commodity gives you a profit or loss of 1.0, as we have seen in the past slides. Index products and options. This is for those who want to trade index as a part of commodity. These are the recent entrants by MCX. Goldex is nothing but a combination of gold and silver prices, wherein gold has 70% and silver has 30% weightage. If you really do not want to trade gold and silver and do not want to give separate margins in this commodity, it's better to trade in bullion index, because all you have to do is just trade the index, which is nothing but a derivative of gold and silver futures. And don't have to give two margins, it is just one margin. So that way, index is a better option for from a trade perspective. In the similar scenario, metal index is also one of the index recently introduced by the MCX, which is nothing but a combination of all the metals that has been discussed in the prior slides. But this we keep it for later understanding, because this is a recent product. It further needs watch. It has to have liquidity. And yes, the next product that is available for trade is options. Like equities, you have futures and options in similar context. We also have futures commodity to trade, and options also in order to hedge from excessive volatility that happens in the commodity markets. Options can be seen for five commodities. Gold and silver are rightly there for options. Copper, crude, and zinc are also there in order to trade in this particular commodity. But yes, it is not so liquid when compared to equity options. And since this is a commodity market, there's a lot of time to mature, and options will grow as and when this commodity market will grow in India. This is just to give you a perspective how the turnover happens in this particular market. In comparison to equities, which is almost 6 lakh crores to 7 lakh crores per day turnover, commodity markets are much smaller when compared to equities in India. As you can rightly see on this particular chart, wherein the turnover of the commodities exchange has declined from 2012 to 2020. But then the other side of this is there is a lot of scope for further betterment and further growth of this market. 40,000 crores to 50,000 crores is what it currently stands in. There is still more room for improvement as and when the commodities market globally also grows, and the world gets out of the pandemic and it is back to normal. You will see lot of activity with regards to commodity, and since this market is in a mature, is possibly in a development stage, there is a lot of time to mature, and this market can really grow well in a good amount of time in the context wherein commodity has to be considered as an asset class, but not just a tool wherein you can just profit out of the volatility. This is also one of the important understandings if you're trading in commodity market. In order to understand commodities, the first important component that you need to understand is where is the dollar index headed. The reason why you have to understand dollar index is because most of the trade that happens in the global economy happens in dollars. Most of the billing that happens in the global economy happens in dollars. And hence, the movement of the dollar really becomes a key significant component of the price as far as commodity is concerned. As you can see on this particular chart, I have plotted silver spot as well as dollar index. Silver spot is a price that trades in the COMEX. It shares an inverse correlation, which means if you really watch the direction of dollar index, you can really watch the price of different commodities that are available for trade. Because most of the time, the commodities and dollar share an inverse correlation. Just to give an example, we are sitting in India. The WTI oil price at present stands at 40 per barrel. Assuming that USD INR spot rate at this point in time stands at 74. For 74, which is almost around INR rate, because India is one of the importers of oil. The oil that used to cost you 2,800 rupees before is now expensive by 200 rupees. Now it is costing you 3,000 rupees per barrel, which clearly indicates that the commodity has become expensive depending on the dollar rupee movement. Previously, it was available at 74 rupees. Now it is available at 75. This is purely because of the movement in dollar, and hence the logic says that. And the second part of this is the more expensive the commodity gets for the domestic users, the more less of it they will consume, and hence the inverse correlation happens between commodities and dollar. Hence, the direction of the dollar is the crux in the understanding of commodities. If you really understand the direction of the dollar index, you can have a significant understanding as far as commodity prices are concerned. These are some of the global issues that has to be understood in the context. US and China trade tensions. Just to put things in perspective, US and China has a lot of trade surplus income because they have a lot of trade, and because of which China has accumulated a lot of trade surplus which US is not liking, and hence US is putting all the pressure that they can in order to balance this particular trade surplus. It is a hole in US balance sheet, and which they want to amend. And what they are doing is uh, they are doing all the particular import. They are increasing all the import duties which are imported from China, so that the trade surplus that China has accumulated will be balanced over a period of time. However, because it is US and China, they share a long trade relationship for a significant amount of time. It is very difficult for both these countries to come at one page and settle all the differences. And this is a cause of uncertainty as far as commodity market is concerned. Since US and China are one of the important trade partners, these are the countries who consume and produce most of the global commodities. It is very important that these two countries come on the table, on the negotiating table, and sort out the differences. Unless and until these two countries come on the table, it will be a difficult ride as far as commodity is concerned. The second most important event that we have right now is US presidential election. Donald Trump is going for a second term, and there is an election on November 3rd. This would be one of the black swan events because whatever happens in the global economy, US is also one of the important part of it. And the political agenda of Trump and his competent Joe Biden would be clear, would really be an important factor as far as commodity direction is concerned. I think it would have a lot of uncertainty, and this would purely have an impact for safe haven commodity as far as gold and silver is concerned. So, if you really want to understand how gold and silver would be traded, I think the U.S. presidential elections is one of the important events that has to be looked for as far as commodities concerned. Brexit, in clear terms, is nothing but Britain leaving the European Union. They have been trying to do this for the past 2.5 years, but they've been unsuccessful in doing so. Whatever is the outcome, if Britain leaves the European Union, it will have a significant impact on the movement of trade and services as far as UK and rest of the globe is concerned. And hence, this is one of the important events that has to be looked for as far as commodity and to some extent currency pricing is concerned. COVID-19, this particular factor is understood by all, and almost everybody has seen the kind of disturbance it has created not only in India but across global economy. And it continues to be a cause of concern because the number of cases with regards to COVID continues to increase in Europe as well as in US. There's a talk of second wave of virus being hitting in Europe as well as US and Canada. This is a cause of concern because if it happens, the global economy continues to a standstill. If countries start imposing lockdowns, it stops all the global economic activity, which in turn slows down the global growth, which in turn results into a recession. 2020 is already a recessionary phase for most of the global economy. The only hope is that the vaccine comes out for this particular pandemic, and there is some ray of hope for the global economy. But all said, I think 2021 would possibly be a period of revival and some sort of growth, which would offer hope for a global economy. If uh, uh, global economy revives, I think consumption of commodities is what really happens, and that would be a big booster as far as commodities concerned. Central banks also plays one of the important role as far as driving of any asset class is concerned. It is because of the role of central banks that the global economy is again come to balance. They have pushed an enormous amount of liquidity because they have said they will do whatever it takes in order to balance the global growth. Global growth, as everybody knows, that 2020 is not a period of growth; it's a period of recession. Almost all the global economy has come to a standstill. The GDP growth has come to negative. We hope that central banks continue to push this amount of liquidity in order to balance and generate employment opportunities in the respective countries, and hence the role of central banks cannot be understated as far as development of commodity market is concerned. That is all from my end. All these things have to be understood in commodity context, and it is really necessary that you need to understand the global economy, the concerns that is happening in the global economy, the uncertainties that are happening in the global economy for a better understanding of commodities. We can now proceed for questions.
Hello.
Yes.
We can proceed for the question and answers. So, in case anybody has any question, please ask Prathamesh.
Hello.
Yes.
Hello. Hello, sir. This is Karan. Can you hear me?
Yes, I can hear you. Tell me.
Sir, my question is very general. I just want to ask that it has been seen that whenever there is a rise in inflation, there is an increase in the price of gold. Why does it happen?
Increase in the price of gold. Yes, so gold is considered as to be an inflation hedge, meaning just the last point I will connect. What really is happening in the global context is central banks are pushing enormous amount of liquidity in order to bring back growth, because of which the amount of liquidity that is being circulated by the banks is too much, which is really creating inflationary trends. And gold is considered as to be safe haven. And because gold is considered as to be safe haven, the enormous amount of liquidity that is pushed in by central banks is going towards asset which would possibly give you returns over a future, because the future is uncertain. And hence, you rightly said that inflation increases, gold increases, because gold and inflation are tightly connected, and gold is considered as inflation hedge.
Okay, thank you, sir.
Any more questions? Any questions from the participants?
I guess we do not have any questions for this session. Oh yeah, there's one question.
Could you please relate the election of commodities to election of US to commodities movement? So just to give you a background of how things work as far as elections and commodities concerned is, election is considered to be one of the important event as far as US economy is concerned. Mr. Donald Trump is going for a second term, and if that happens, uh, it has been 4 years when Donald Trump has been elected in the US as a president. From the time he has elected as the president, you have seen lot of uncertainties in the global market, right from US-China trade tension uh, to uh, to whatever tensions that is created with regards to the political scenario in the US, with regards to how COVID has been managed by the current president, how what is the kind of employment scenario in US. So all these factors would play out to be a significant consideration as far as who comes in as the next president, and what it will it is not only just commodities, it is the impact on every other asset class that is available for trade. So if the agenda of the US president is to bring back normalcy to the global economy, if the agenda of the US president is to bring back employment to the back in US, I think these are some points of consideration that really will have an impact on how commodity price moves. If there is a lot of uncertainty, I think gold and silver are the first price, are the first commodities that would that would give you a first tick, and there's more room for further growth in this commodity in terms of price. So you can directly correlate with regards to US presidential elections and the movement in gold and silver. This can directly be connected. While if things are not happening good as far as US is concerned, I think it does not bode well for the industrial metals that we are talking. It would be lead, zinc, nickel, aluminium. These are industrial commodities. If the political agenda of the US is not in favor of commodities importing from China or commodities exported to China, it would have a real significant impact on the price of commodities. So it would, to just put things in context, I think this election would probably will be one of the black swan events that would happen, and you can see a lot of uncertainty and in turn volatility in all the asset class that is traded globally. If gold moves up, what impact would it have on crude oil and natural gas? So there is no direct relation as far as gold, crude and natural gas is concerned. The only thing I can put you in context is if there is a lot of uncertainty, I think gold and silver are the first commodities that will move up. To put things in context, if there is uncertainty, which means there is global economy is in slack, and the consumption of crude will come to a standstill if the second wave of virus with regards to pandemic continues to haunt global economy. If that is the case, I think global economy would purely be a case of oversupply and less of consumption, and crude is not really the asset that will perform in this particular scenario. So that is how you will understand this commodities in context. Although I am talking about dollar index and commodities inverse correlation, every commodity by itself has its own fundamentals which moves up its price. I hope I answered your question, because every commodity by itself is a big industry and it really takes good amount of time in order to understand every commodity in detail. Dollar index rises or falls because of uncertainty. Just to put things in context again, dollar is considered to be one of the safest havens, safest bets for investors. And if investors sense uncertainty in any part of the globe, I think the first safe asset that they will move into would be dollar. And because the dollar is one of the important currency that is used globally as far as trade is concerned, I think that is how I explained the context of inverse correlation between dollar index and commodities. Do we have any more questions from the participants? Vidisha?
I think we are done with all the questions. Thank you so much, Prathamesh, for taking us through the session. Thank you to all the participants I hope this was a very enlightening session for all of you. Okay, there's one more question. I think Prathamesh.
Okay, there's one more question. We'll take it up and then we will possibly
wrap it up.
Yes. Again. If because of uncertainty dollar index moves up, shouldn't gold move in inward direction? Sir, I just said that the teachings of commodities are dynamic. It will have most of the time it moves in inverse direction, but this has been a year. 2020 has been a year of uncertainty, and dollar, gold, and silver are considered to be one of the safest bets as far as asset class is concerned. And because of this reason, the relationship that I am talking about gets nullified. So it is dynamic in nature. What I taught you today is a general sense that dollar index and commodities share inverse correlation. It might not hold true in every context because the situation at present is different. If it would have been a normal scenario, I think the inverse correlation would have been standard. But now, because global economy is for a toss, there is no growth in any part of the economy. There is a recession happening across the globe. I think dollar is one of the asset. Gold is one of the asset. Japanese yen is one of the asset which is considered to be safe haven, and all the money would possibly move into all these three assets, and hence even if dollar index rises, gold and silver would possibly continue to rise. Okay, Vidisha, that was all from my end.
Thank you for the great session, Prathamesh, and thank you once again to all the participants. And please stay tuned on Smart Money and for more webinars to come in. Thank you so much.
Thank you very much. Thank you.